Good day, everybody. We've got a market that is consolidating some of its gains. We've had a huge gain a couple of days ago across the averages, all of them hitting new all-time highs or new multi-year highs. And so this kind of action after such a nice gain is healthy as the market digests its gains. Leading stocks continue to lead the way, as should be indicative of a healthy market uptrend. We continue to see actionable names. Of course, we advise members in real time through our reports when we see these sorts of things, and they've been plentiful over the last few weeks. And so all systems go in this market. I mean, there's not a whole lot to be said as far as market action is concerned, just simply because we are in a good phase here, and hopefully, and we know some of you have enjoyed some of these gains. Sometimes it's good, still in this market environment, to be nimble and take your gains off the table when they do occur, because the market has a tendency, despite its uptrend, its very long uptrend since 2013, to take little baby steps backward and correct typically within 5%. But when that does occur, your leaders tend to get knocked around quite a bit harder. So it's nice to be able to take those gains off the table when warranted, because those gains can evaporate when the market decides to take a small correction. And it does so regularly. I mean, if you look at the NASDAQ chart so far, well, since 2013, you'll see that it has a rhyme and rhythm to its corrections, and some are greater than others. And it looks to me, you know, based on the tempo it's had over the last year and a half, that it's probably going to be due for correction sooner than later, of a few percent. The wild card, of course, is QE, and all the central banks are continue to print en masse, and it's also possible that maybe this, at some point, this uptrend starts to really accelerate, kind of like we saw in 1999 with the Fed relaxing monetary conditions in anticipation of the year 2000 issue, which put the scare into a lot of people. So at any rate, we will do as we always do, watch the price volume action of leading names and major indices, and so far the signs point toward heading further north. Gil?
Yeah, I think what you're seeing a little bit of the last few days is some rotation into some new areas, and I've sort of, you know, the way I handle things, my best performing position was SunPower. It's one of my biggest positions, so that ran up, you know, up in here at the 40, 41 area. It's up, you know, 30% or so for me based on my initial entry. Remember, I was talking about it down in here. I thought it was viable as the market was turning. And you got a pocket pivot, I think, here, and then the viable gap up. So by the time you get up in here, you can be pretty heavy, and the thing launches. So I sell into that, take the profit. I think some of these stocks are going to slow down going into earnings as we progress through the month. So in my views, if you have a nice profit in a stock, you can take at least half of it going into earnings, and maybe if you're feeling adventurous, you can sit through earnings roulette. But you know, the other thing about earnings seasons, as we go through it, you're going to be presented with opportunities in terms of viable gap up. So I just sold this a little while ago up here and taken a nice profit on it a couple days up. But this Greenbrier, you know, that's a new situation. I'm looking for it to pull in a little bit here. You know, maybe it'll just keep going, but that's fine, because I think I see other stuff also that's looking okay. I think Twitter still remains in play, but it's pulling back into the 10-day, so that it sort of deserves that. It's had a nice move. I mean, I started buying it down in here, and so that's been about a 20% profit there. But I did sell into this move on the news that they had a new CFO. So, you know, I'm sort of shifting around here, selling into sharp upside moves, trying to buy stocks coming back in. I like the JD.com. You know, I bought this thing right on the line. You had no pocket pivot, took off, broke out, but that's a V-shaped sort of cup, so it's a little premature. So coming in now, I'm buying it back here along the 10-day line this morning, if it's hanging in there so far. Let's see. Yeah, it is. And then also GTAT, which we've been talking about in the chat room. This actually, Dr. Have you looked into this? It's a pretty interesting situation, because what they do is they make components for solar cells, but they also make sapphire for Apple's iPhones, and supposedly the iPhone 6 is going to be unbreakable, and that's going to be because they're going to be using this sapphire produced by these guys. And I also noticed there's a lot of big funds coming into the stock. I noticed the Fidelity Blue Chip Growth Fund took a 1.4 million share position, I believe. Or wait, no, I think it's a Fidelity Advantage Growth Fund, something like that. Anyways, there's also some value funds, believe it or not, A-rated value funds that have taken new positions in this, which I think is very interesting because you usually don't see value funds buying breakouts or buying stocks that are breaking out to new highs. Maybe they're the ones selling a little bit of it here as it gets up into the 20 area. But you have a breakout here. It's a cup with handle. I think it's a 2-week handle, and you break out. Now you're pulling back in, so I think it's viable. But I was on the chat room buying it this day on Monday, and ran up 10% real quick. You could sell some into that. Now it's coming in. Now I'm actually looking at getting heavy in it again as it pulls in. Maybe it comes down. I'm thinking the top of here is 1920. So you got down to about 1930. That's pretty close to the top of the base. So right in there is probably a good entry point if you like the story. I think the only risk here might be that Apple is a big customer, and if for some reason they lost Apple as a customer, that might cause the stock to tank. So, like any stock, it's got risk. News can hit a stock at any point in time, and you never really know for sure when that can happen. I mean, some people like to ascribe more risk to certain stocks. Biotech, for example, will tend to have more headline risk given that their drugs are always in development and there's always news pertaining to that one way or another. And, of course, these guys had this Bible gap up here on news. This was on news of a drug being fast-tracked or something, right, Dr. K? Is that correct? Am I right there?
Yeah, that's right.
Yeah, and so it took off of that. But that was on the heels of this Bible gap up. So you have 1, 2. This is the third Bible gap up. And this one is hesitating more than the other two, which makes sense to me. Now, if you're applying Livermore's century mark rule here, then you would think that pullbacks to 100 should hold. Yesterday you had one that actually held. I think it got to like 150 cents, something like that. And
that's right, yeah.
It was yeah, exactly, 150 cents. And you rally back up, and now you're coming in again. 10 days catching up, so maybe the 10-day catches up to it and it flags in here. That would be a likely scenario, I think, because you have 3 Bible gap ups, and that starts to get a little bit obvious. And Kramer's on TV babbling about it. I think everybody knows about it. Has IBD talked about it yet, Dr. K? Do you know?
TWPH, I think they did. I was looking at. I look at a lot of articles, so I don't always remember the source. But oh yeah, they did talk about it just yesterday.
Yeah. So.
The article that I looked at was the one on the 19th, June 19th.
Okay.
But that was for the epilepsy drug.
Okay. Let's see. Palo Alto Network.
What intrigues me about this company really is more of the CBD aspect of it. But nevertheless, the chart's looking great. I mean, it's
and it's entitled to a pullback, I think, into the 10-day line. So I actually sell into this move because I'm in down here, and I got a 20% profit on it plus. So I'll sell into that, and more like 25% profit, I think it was. But in any case, I'll sell into that, and I'm looking to buy back on some weakness in here. I mean, I could buy back at any point in here and buy it a good, not quite 10% off the high. I think it's what would you say, 8% right now or something like that, 7, 8%. Anyways,
yeah, that's right.
Look at this, GBX is still going. I know it's going to make me look stupid now. Watch. No questions yet. We actually have some.
Yeah, actually, I was to say on the GWPH, it's interesting because it had another gap up 4 days ago, and it looks like it's behaving appropriately. So, someone could take a position closer to here or closer to 100, and then and sell the position if if it undercuts by a couple of percent. So your risk is very low in initiating something around here. The story's compelling. The chart's infinitely compelling. So one could use the 7-week rule instead on this one, with the anticipation that it's going to keep going up. If not another tenfold, but perhaps it's going to go up another 50% or 100% before it makes some sort of violation.
Right. I would agree with you that it has a lot of upside potential. So, someone's asking about ANET. I'm going to go through some more names here. Palo Alto Networks. Whoa. Got a little. Nice pullback into the 10-day line, and it's holding. So I think that's constructive. Give me 1 second here. Just adding a little there on this pullback. I think it looks, they don't announce earnings until early September, so I think you have to test this pullback, and as it works, you can, if it comes off the 10-day line, you can kind of nibble in here and get back in. That's what I'm doing here. So let's see, ANET. Well, this thing had a pocket pivot down here. Dr. K, I was a little bit surprised on this one because it's coming off of a downtrend. But that, if you bought it early on Tuesday, you made pretty good money on that trade. Look at that thing. I mean, that was up. I mean, that's pretty much 20%, and not quite. Yeah, close to that, 18%, 17%, something like that. I don't know. In like 2 days. That's wild.
Yeah. No, it's in context of the price bar and everything on the weekly. That pullback was reasonable. So when it did the gap up, that was ultimately a viable gap up. That was actionable on the basis of it of what it had done prior. And the other thing is that it's an IPO, so I'm going to be a little more forgiving for the patterns as long as the overall pattern's right. But really, the thrust of it is that it had traced back from 72 down to about 62. So in the context of where it was IPO'd and where it got to, that kind of pullback was reasonable.
Got it. But it's extended now. So if you're gonna, I don't know, would you buy into this thing now?
Hell no. You're at a chance. I mean, just go. With screaming buy point, and now get ready, or sell into the strength, depending on what you want to do. I might be tempted. This sort of thing, you could trade around the core positions. GWPH. That's how I'm handling that one because I believe that this thing is going to continue a little higher.
Gee, Dr. K, you're so convincing. I feel like just buying my position back right here, which I suppose I could do.
Yeah, what about 4% risk? It's buying it around this
level.
Well,
it's about 7. Let's see, 7%, 8% from where I unloaded it. So it's it's right there. So. Anyways, let's see. Hold on a second. I'm getting a little feedback here on my speakers. There we go. Okay, where were we? All right, I just bought back my whole position in GWPH. It didn't budget, though, unfortunately. So everybody get in there and push it up for me, okay? Let's see. When selling into the upside move, are you making your decision around the stock trading X% above the 10-day a MACD stretch or just a gut feel? I think I already answered the question. For me, it was the third viable gap up, so I just sell into the streak. And look to be buying it back. And that, I think what Dr. K is talking about here, if you're using this low at 99.50 as a stop, you're definitely within buying range right here. So I don't really have a problem there. We do close early today, don't we, Dr. K? At
yes, it's 10
a.m. my time.
Hour 45 left in the trading day, I think.
Yeah, so it's still. Anyways, let's. I don't like the way they whacked Yelp. I mean, that was looking really good yesterday, and it just comes right back. Probably got overhead, and maybe it doesn't go anywhere until earnings. Let's see here. Kihu had a nice move, but you can see, again, this was stalling yesterday. So there's a bunch of that kind of stuff, and I think you got to watch that. Just watching the market here. they're going to give you quiet re-entry points here on stocks, and no one will take them because no one's going to be around. Anyways, let's see, Workday. We got through some questions. I mean, it's another one of these stocks trying to come up the right side. I think a lot of these have been great trades so far, but you know, it's like going into earnings. I think a lot of these things are going to have to slow down a bit. So I'm not really interested in any of these right now. I'm looking at newer stuff. I think you know, Twitter is a similar situation, but I think it's got more upside. You're seeing Facebook backing and filling. I think you could be seeing some money moving into Twitter. So you know, I still think that's definitely happening. Let's see. Would you play Cree for a trade? You're kind of late on that. You know, it's like if you wanted to try and play it, I guess you could have bought this bottom fishing pocket pivot. It's running on news because Philips has spun out their LED manufacturing unit, and now there's speculation that they're going to try and merge with Cree, and so you know that's what's moving. So would I buy it for a trade? That's kind of a silly question when it's extended like that. I mean, looking at this and thinking, can I buy this, is just kind of nonsensical greed. I think you're seeing something move, and so you've got to be on it now. And my view is you need to anticipate moves as they're setting up. You know, so I wouldn't bother with it. Here, I'll let you talk about this one, Dr. K, since this is one of your favorites. Organovo. I don't know. Do you think this thing is coming out of here? Here's a weekly.
Yeah, it's. I mean, I love the story on it. If you look at the weekly, it's. The thing is that when it gets tight in the pattern, you know, on a downtrend, it gets pretty tight, and then it blasts off. So we're not seeing that right now. What we're seeing is a bit of sloppiness, and it did clear the 200-day, and it did have a gap up, and so. What's happened in the past means that this is probably going to consolidate again into a downtrend or into a tight sideways patterns like we saw in September and October. That would be very constructive, and then I would be all over it again, you know, on a pocket pivot. But you know, at the current level, I wouldn't be buying it here. You could have taken a position when it cleared the 200-day. You have a little bit of cushion. The 200-day may act as some sort of support for it. So if you're sitting on it, you know, right around the 200-day, basically when it was trading at around $8, you know, in the low eights, $8.20 in that zone, you got some cushion and you could just afford to sit. But if you don't have it, I wouldn't be buying it up here. I would wait for it to consolidate and buy on the pocket pivot.
Making some adjustments here. Okay, Twitter's moving here. JD is coming up a little bit as I'm watching here. This GTAT's kind of bouncing around, but I think that's normal. It's had a pocket pivot here, so I pull back in here. Looks normal to me. So, what else? More questions. UA setting up. Well, it's like it looks like CMG and it looks like Netflix. A deep cup, not too bad, 37% I think, and forming a handle. So maybe it's setting up. So I guess what you'd be watching here watching for here is a pocket pivot. So coming off the 10-day, sort of like, you know, that's what Illumina did. It came in and set along the 10-day, and then you had a pocket pivot. It's not really moving fast because now it's a breakout. You know, my tendency is to think that breakouts are when they get obvious. Tesla, I guess their Norwegian sales were down, and that was announced yesterday. So the stock got hit, but to me it was angling to get hit. I sold it on the moves above 240, you know, because you got a nice move there. I bought it right at like 206 and change, and got a nice move off of there. So now it's pulling back. You got earnings coming in at the beginning of August, I believe, and so. You know, it's entitled to do a little work here. And if you look at this, you got a cup, and now it's trying to form a handle. So it looks normal, but it's down to the 20-day, you know. And it held the 20-day moving average this morning, which looks okay. So, anyways, CRM. This is one I mentioned in the chat room along here the other day, I think last week, and the stock came up and off the 10-day because it's coming up. It's trying to build a new base. The interesting thing with CRM is that they're now shifting into profitability on a consistent basis. Their historical record is that when the stock is, when the company announces earnings, they'll be up 35%, they'll be down 30%, up 18, down 20. So it's been erratic, and now you're moving into a phase where the earnings are a lot steadier, and I think that's constructive going forward. So this may have some potential. They announce earnings, I think, when do they announce earnings, Dr. K?
Well,
8/29, so August, end of August. Some of that's in Tesla forming handle. Well, I don't have a crystal ball. All I can tell you is that it looks logical that this would be the first week down in a potential handle. So, there's no big deal there. That's what's going on. Now, do you just, come step in and buy it here and expect instant profits to the upside? I don't know. So, the earnings come out there at the beginning of August. So, and there was definitely, there are wedging signs. That's what I saw as well. Someone else saw that, and that's good. Because you can see it's moving up in this ascending handle, but you see the volume is declining. So when I see it making new highs around the 240 level on light volume a few days ago, whatever I've got, that's gone. And I sell it and let it come in and then decide where I want to come in. So that's the method I use because I like to run big positions. So and I work them around pretty hard and run them through their paces, so to speak. Anyways, let's see. First Solar is another solar name, but it's building a handle going into earnings later this month, so I don't think you really want to get too involved there. Let's see. Some of these other Chinese internets, YY is another one that's been coming around. You see a lot of this sort of stuff, which to me argues for a potentially sustainable bull phase that lasts for a while. So we're seeing Palo Alto Networks starting to pick up steam here. Held to 10 days, so that's constructive. That's exactly what I wanted to see. So, and I sold on, was it Monday, I think? I sold into that gap up myself because I just felt, IBD had written a big article over the weekend, I think it was, or which day did it have that big gap up? That would have been, Monday. And I saw, the big article on IBD, Palo Alto Networks has arrived, blah, blah, blah. So I thought, okay, they're going to, get this thing going to the upside, sell into it. And it comes in now, try and buy it back, or I'll buy it back along the 10-day line. So let's see. I'm watching for questions if anybody's got any. VIPs. Just, you had to buy this, and you had to be patient with this. It broke out. It pulled back to the top of the base. It was buyable on weakness, as I think most leading stocks in this market are. Maintaining an opportunistic stance, I think, is really the way to handle a lot of names rather than chasing strength necessarily. Although in some cases, you can chase strength, and I'll do it if I see something like this. On this kind of volume, that gap up closes near the peak. That's pretty powerful to me. Let's see. Around these holidays, low volume days, undisciplined or okay strategic, like FB. I don't really understand the question. I tend to slack, give more room, and not act right away on my stops around these holidays. I don't know. Whatever. If that works for you, then keep doing it. More power to you if it works. But I just look and see what the stocks are doing. I don't think about, well, the jobs number comes out on Thursday, and that's low holiday volume, and it's the moon is in the 7th house, and Jupiter is aligned with Mars and Venus, and I don't really think in those terms. I just look at the stock in real time, and I make my decisions based on what I am seeing on the chart and in real time as the things are trading. So that works pretty well for me, and it's a very simple way of operating. So I have to say, would you say maybe this is a case for you as well, Dr. K, that we've both been doing this for about 25 years now, a quarter of a century, and I think in a lot of ways what happens is you kind of go through an evolution where you start doing it, it's relatively simple, you're successful, and then you're really successful, and then you start, really making things complicated, and then you have to sort of come back home to making things, simplifying again and re-simplifying. Like at one point I had 6 monitors going. Now I operate with 2, one to watch my quotes, the other one to do other work on, write books, whatever. Would you say that that's similar for you, Dr. K, or have you always maintained a certain level of complexity in your analysis?
I think that we all go through phases, and the first phase is thinking you know it all, and that applies to the next 5 phases, by the way. That's really, I think, the big challenge is when a person comes into a lot of trading success, they get the big head. And as O'Neill always said, I think every day I knew him, don't let your ego get out of control. Maintain your ego, transcend it if you can. And that's, I think, one of the biggest challenges to everyone who does experience success in the markets. And the other thing is, there is a tendency to overcomplicate. I went through waves of that, even in grad school when I was developing what I called my econometric timing model, which was basically taking a market direction model but adding bells and whistles to it that were really unnecessary. And then going back to the basics and simplifying the process and understanding that a guy like O'Neill only needs to look at price volume action and uses a 50-day and 200-day moving average. He doesn't even use a 10-day. And he's so simple. He doesn't use hundreds and hundreds of technical indicators. He keeps it simple, and so over the years, I've gotten back to basics. And I think it's like a great painting. Great painter starts. So I think maybe it was Picasso or one of those who said, he spent his lifetime learning how to paint like a child. And I think that was very profound. You get back to your basics. So when a great painter can paint like a child, then they've, I guess, really let go of all the noise in their technique, and it's now down to the most pure essence of it. And I think that's where O'Neill certainly had what he had achieved in his trading career, and I'd like to hope that we're heading in that direction. I believe everything can always be improved. But that said, the way I look at markets is far simpler now than it was back in the 1990s.
Yeah, and the same thing for me. So. I've also realized that I can't create these portfolios for other people that are somehow going to emulate the performance that I get myself. And I've also had to come to the realization that having made my fortune as a trader, trading my own money and trading O'Neill's money, which, that was basically like trading your own money, right, Dr. K, because he never hassled you at all.
Yeah, it was great.
Anytime you had anything to say, it was constructive. It's not like if you have a fund or you manage accounts and you have clients, they're always whining at you, and that's such a huge distraction. And then you start to think in different ways, more in terms of whine prevention rather than performance-oriented and just doing your thing. And so I've, in a sense, had to come full circle and really just get back to my roots. I made my fortune as a trader, and that's what I am now. I am a trader. Trading my own money. I'm not screwing around trying to do it for others. And I think that's also why Portfolio Simulator, dude. I forgot to tell you this, Dr. K, but I took him out and shot him the other day because I don't think I can. If you want to put out alerts on that, you can go ahead and try and build a portfolio of 10% of this and 10%. I can't do it. I just can't do it. It's not me.
I think it also depends. That kind of style is one kind of style. There's myriads of styles, so we don't also. I think it's a rough guide at best to how someone might want to trade their own portfolio.
Right, exactly. And I think we do people a much better service just trying to teach them how to trade on their own. That said, a good question here is how do you screen for pocket pivots and gap ups so that you can buy them early enough in the day that it's not so extended that you are chasing it? Generally, I have a list of stocks that I'm watching, and I see it happen in the morning. I come in the morning, I look at my quote screen, and I look at the bid and ask against everything on my watch list, and I can see whether there's some sort of gap up going on. If there's something else, you can go on finbiz.com. I think there's other websites where you can actually get a list of stocks gapping up, and so that's where you can get it. But in terms of pocket pivots, I basically go through my my handy dandy HGS Investor, and I'll just show you the charts, things that I look at. So, for example, let's take GTAT. I can see this thing right in here. Let me make this bigger. I can see it right in here It's already had a pocket pivot, so it's coming up. It needs to build a handle. It builds a handle. So I can see right in here that everything's starting to get code blue on me, and it's holding in pretty tight, weathering a little bit. I think this was the day of the index rebalancing. Was this day here? So I come into it here and I look for that, and then the next day it has a pocket pivot. So was it lucky, or did I can see the tightness as it's setting up. There was another one on the chat room. I talked about Wooba. I love that. I don't like this stock because it's not marginable and it's pretty squirrely. But if someone else wants to play it, I actually talked about it in the chat room. Whoops, right here on this day as it was sitting along the 50-day moving average, but the volume is drying up as it's trying to round about, and I've got my indicators giving me a reasonable indication, for lack of a better word, that these things want to go, this thing wants to probably move higher. And so I'm looking around for stuff like that. So I'm going through my watch list and using the HES Investor to screen for names. There's a number of built-in screens they have in here that are based on our work, so that's another advantage, I think, to using it. So the guys at HES Investor aren't stupid. They know, they can see when stuff works, and they've combined it. I know Ian, what's Ian's last name? Woodward. I wanted to call him Underwood. Yeah,
same.
But there's he's combined it with some of his stuff, and he thinks it's very powerful stuff. And they're not stupid, and so they put a bunch of this on their system. So meanwhile, go ask someone at IBD what a pocket pivot is, and they'll probably look like they're going to blow up or something. They've probably been given a handout from corporate media relations telling them that you can't say anything about pocket pivots. Anyway, somebody says, new record, 108 lounge lizards in the chat room yesterday. Dr. K, when are you going to visit? I don't know. Maybe I'll talk him into surprising you all with a visit for, what do you got? Could you spare like 5 minutes, Dr. K?
Yeah, sure.
So we'll try and drag him in for a couple of minutes, but we'll see. But I'm going to have to probably ply him with something. Maybe I have to send him a case of wine. I don't know. Do you find the up-down volume listed on IBD stock checkup a credible indicator? Don't even look at it, so I couldn't tell you. Don't need it. Would you buy MU here on the gap up? I don't know. Let's get rid of this stuff here. MU. I mean, MU works, but it tends to move slowly, so I think you're better off buying a weakness. But, if you want to go ahead and buy it here, be my guest. Okay, let's see here. What do we got? DRNA. That one has not hit my... oh, it's a cheap pharmaceutical. I don't really know enough about this. I guess you could say you got a pocket pivot gap up. So if you feel comfortable about this, anything about this, Dr. K? If you feel comfortable about it, you could, I guess, buy it on.
No, this has not been on my. It hasn't been on my radar. It's too thin.
It trades like 2 shares a day, doesn't it? It trades 150,000 shares. Yeah, it's too thin.
Too much risk.
Yeah, see, someone says IBD employees don't acknowledge the existence of pocket pivots. And that's just their own stupid political bias. And I think it speaks volumes about the feebleness of the organization in terms of being an honest research organization that supposedly IBD research brings you the latest in what's working in the market. Sure.
Well, I used to be a big part of the IBD research arm without being part of IBD, because
right, exactly.
Phil would call me routinely and said, "What you got for me?" because he knew I was always cranking out research
right,
studies.
And you come up with the pocket pivot now, and it doesn't exist to them. Yes?
Yeah, it's kind of funny. I mean, I do remember very early on when he brought me in as a portfolio manager, and he said, "Yeah, I love how you've done all this research. The first time I met him, I had a big stack of research I brought into his office." And then now it was about 1.5 years after that first meeting, and he said, and I know you're doing research, so I want to be able to call you, or you can call me anytime. It can be 3, 4 in the morning. And let me know. You can call anytime. Here's my house number. So, and then, of course, he appointed me to head up the 1998 model book, and, that was great. I love being his research guy because, I'd been doing research basically since 1990. 1990, yeah, since I had read his
All right.
book, that totally changed my thinking on the market. So that would have been about 1990. I really started to put my nose to the grindstone and really start to learn how he sees the markets. And that was a big change for me. And I continue to do the research studies since then to this day. And I think it's great, you know, all the things he did with the model books over the years. I don't know anyone else who's done that kind of complete research, but nevertheless, you know, no one's perfect, and it is kind of interesting that he's very reluctant to concede the existence of pocket pivots and viable gap ups for that matter. Although, didn't you say, Gil, that that IBD is now starting to poach the viable gap up concept?
Well, they
And start
they
to
make the
integrate it?
statement, and it's in there in writing. You can probably go look for it. That gap up moves in leading names can be bought, but they don't give you any specifics about how to buy it, because if they did, they would probably have to cite what we've already cited in our books, and
Right.
they're so anally proprietary that they cannot acknowledge the existence that it might work. I mean, the problem probably is that had you come up with the pocket pivot when you were still working there, it'd probably have a totally different attitude towards it.
Well, it would be the property of William O'Neill and Company. You know, it's plain and simple.
Yeah. So
And you know, that's of course, you know, as when I agreed to do all this, you know, to do the work for O'Neill, of course that's the agreement. Is
Right.
that, you know, the company of course owns all the findings. So in a way, it was good that I made these two fairly substantial discoveries after I'd left the firm, so that I could, you know, legitimately call them my own,
right.
without having to share the credit with Bill.
Right.
Although that said, I don't mind sharing ideas. I've always enjoyed the process of back and forth. I like being open source, and unfortunately, the O'Neill organization is very closed source. In this day and age, you can't be closed source. You got to be like Android. You got to be like Google. You got to really share the knowledge and cooperate, because that's how you make your biggest gains. Not just in terms of your knowledge, but in terms of how, you know, the partnerships and, you know, all the cooperative effects that are created from being open source are massive, as opposed to seeing the world as a, you know, one competitive giant, you know, me versus them attitude, which is of course an unfortunate how the O'Neill organization approaches the markets.
Right. Anyways, enough ranting. Tesla also just went open source. Well, they're letting people use their patents, which I think that's shrewd, because they're basically trying to set standards for an industry that has lax standards, and I think that's smart. Let's see. More questions. Juan should have licensed his yeah, we talked about that last week. The IBD industry groups, they are the best industry groups out there, but you know, they won't let anybody else use them, unlike S&P, Standard & Poor's, which has, and so Standard & Poor's remains the standard, whereas O'Neill industry groups are not, which is, you know, it's a squandered opportunity based on a short-sighted approach to business. So,
I know, ranting.
but I don't really need to worry about it, so I just keep making money in the market, and I'm doing my
Yeah,
thing. End of story.
I mean, actually, I see it as it'd be nice if they'd open their eyes, you know, because it would benefit them. And
Yeah,
benefit
so everybody out there, when you see them rag on them, you know, why don't you guys talk about pocket pivots? They work, and the facts show they work, and you guys are morons for not acknowledging that. So whenever you see them, and I know a bunch of you do, you know, bring that up, and bring it up in a forceful way, because it should be brought up that way, I think. Anyways, Kate, pulling back to the top of the handle here. It's a little bit slow. It's a retail stock, though, so kind of to be expected. AR Eris. Gap up here has moved up. It's just hanging along the 10-day. It's violating the 10-day, but I don't think you're using that as your selling guide, right, Dr. K? You'd be using the 50-day. Is that right?
Yeah, that would be my yeah. You wanted to use the general rule for it.
Yeah.
Yes, because it's violated the 10-day very quickly, and it is a little sloppy the way it trades. So I'd be using the 50 on this one.
Yeah. Okay. Let's see. I love the ranting and you guys sharing your experiences and stories.
Mm-hmm.
I mean, I think we're about one thing and one thing only, which is improving as traders and helping other people do the same thing, and that's pretty much it. And so however we can do that, those are the interests that we serve. End of story. What about, let's talk about some other names. Oil names. FANG. holding real tight along the 10-day line. When did they come out with earnings? I think they come out sometime in the next, the first week of August.
It says the August 6th, but
Yeah.
it's...
Athlon, a choppy name, moving to highs though, staying up there. That's looking okay. Bonanza Creek taking a hit though, but within the context of that move, that's a reasonable correction. Maybe these things become viable down in here. CLR is another one holding up. I mean, most of these oil names are just pausing here, so that's really, it seems to be the bottom line with them. Just taking a break as we move into the summertime and after they've had a big move, so it makes sense to me. What else? Someone else likes the stories. I don't know. Someday we'll write the really down dirty book about O'Neill. Inside O'Neill. All the dirty secrets. Let's see. This is just extended Freeport. I was looking at this a while ago, maybe 3 weeks ago, and I was noticing they look like they're turning, and I was thinking if gold turns and silver turns, then these things might turn as well. And what you notice here, you had a pocket pivot in the SLV a couple days ago on Monday, and same thing with the GLD. Meanwhile, what is the ETF for copper?
CUP? No. ETF for copper. Here, let me...
I know somebody out there knows it. JJC, thank you.
JJC, yeah.
And copper's
haven't looked
turning,
at that in a while.
So you're seeing then the commodities are turning, and all. So that all looks pretty good. 3D stocks spiked the other day. Yeah, I guess they're trying to come up, but we talked about this. I think you saw this one had a pocket pivot in here somewhere. I'm trying to remember here, coming up through the 200-day. I think we talked about it last week, last Friday. And so, that is just continuing higher to build a new base. So, but I don't see anywhere you're going to buy them. So, this one, 3D Big Jack. There's some rumors about them being bought out. But net, they're up. They're already up there. You didn't anticipate these a while ago. Data short. I'm not going to short anything here. I don't know. If you want to try shorting it, go ahead. But I don't really see that as the line of least resistance here, to tell you the truth. So, VJet, same thing. I mean, they're all doing this. So, I don't think you're going to buy these here and they're going to shoot up. I think that's kind of the outside probability here. And if you're going to move into these names, then you have to really be looking for another move. I'll show you an example of something. In Trexon, I was on the chat room. I bought it right here. It was starting to flash code blue, and then you had a pocket pivot coming off the 10-day, I believe, here. And so stock launched higher, went to 25, and now it's moving sideways. And I went long the stock again yesterday because it's getting tight, and it's flashing code blue on me, so it's looking good. And I'll come back into it in here. So I think when I look at a lot of these like this, and I look at this, and these other things, the VJets and the DDD, they're coming off the bottoms nicely, but they're probably going to have to consolidate. So what you might want to do is just keep a close eye on them and see if they set up or have these pullbacks. The one thing that might help them accelerate, if you can find a nice entry point where they're pulling back on really low volume, and you have the conviction to make the trade, I think that the fact that everybody probably went short these things and you have huge short interest might mean that they're going to have further upside or set up quicker rather than taking more time, like, say, something with an XON. Interestingly, off the lows of this one, insiders were buying the stock. I think there were 7 insiders were buying the stock, and nobody's been selling it. So, I don't know. This one undercut all these lows. Is trying to build this weird cup with handle. So, but it could be, in hindsight, if it fails, they'll say it's a improper cup with handle. Your view on the GLOG recent move. What does my view have anything to do with it? Pocket pivot was here, it runs up, it breaks out, but it comes straight up off the bottom, and now you're hanging around the 10-day. Nothing going on there. From a technical perspective, there's really nothing there to get excited about. If you bought the pocket pivot, you're doing pretty well. But I would tend, if I bought it here, I think I did buy some of this one, and you sell it, and on the breakout, sell into that and look for it to settle in and hang out at the 10-day. Let's see what else we got here. AKRX, Acorn. This one keeps hitting my screens. You're a little bit late on this. You had a pocket pivot here. Did we report on this, or did we miss this one? Or are we a little bit skeptical of this?
Let's see. There have been so many interesting names over the last few weeks. Let's see, AKRX. Yeah, we got that one. We call it on July 9th.
Yeah, okay. And that was, well, July 9th was, July 9th. Oh, right,
Wait a
right.
minute. That was the...
Right there. Was that it?
Wait
This
a minute.
looks like it should have been
Sorry.
on July 20th.
We're not even in July. I mean, I meant it's got to be June 9th. Hold on.
Yeah,
let me,
okay.
Let me get back again. That.
Right there, right there.
No, it says July 9th for some
Yeah,
reason.
right there. It's continuing higher. Then there was another pocket pivot here on a breakout, and it's going.
I'm going to tell Raman immediately. I'm going to tell Raman immediately because. Oh no, hold on. We didn't catch that one. That's July 9th, 2012. There you go.
Okay, did we catch this one?
That's fine. No, we did not catch that one.
Oh,
I was
that's
getting.
pretty
I was
cool,
almost in a panic. I was like, these dates have to be right. There can't be any mess ups on the dates. But anyway, the date is correct. But it was July 2012.
Okay.
So we haven't caught this one yet. I think we must have had some skepticism because I remember it hit the radar. Yeah, I mean on the 20th of June, we've got noticeable buy point. I mean a noticeable pocket pivot.
Right.
I think that there's been a lot of biotechs coming through though, and that's so. Yeah, my guess is that we gave it a look over and then decided to, that for whatever reason we decided that the others were more powerful.
Yeah, a lot of them are moving pretty well actually. I know some guy sent me a message through LinkedIn giving me some long story about this. Avenir Pharmaceuticals, $5 stock. I don't know, so I wasn't really that interested. Okay, let's see. Watching XON moving up to 26 here. Is there an entry point in Gilead and Jazz at present? Well, the entry point was on the pocket pivot on Jazz. What's your take on Jazz, Dr. K?
Well, it's been looking better. It had a really good run up in starting in 2013. So it is definitely worth watching. Just looking at when we last put out a report on this was May 27th of this year. So that was when it broke through the 50-day. So if you'd bought it there, you still should be sitting in this, or at least around a core position. I mean, it didn't get going for about 2.5 weeks, so you might have gotten restless. And there's nothing wrong with having actually sold it in that flat portion. If you put the money into something better, that might have worked better for you. But if there was nothing to play over those 2.5 weeks worth going sideways, it's not doing anything wrong, so you can just sit on the position, and now it's finally waking up. It's had a few pocket pivots in the pattern, consequently. So it's looking good. Well,
it's a cup. I guess you could say you got a 1 week candle here, a 1 week candle here. I mean, it's acting okay. But now you want to buy it. Like I keep saying, I think you really have to be a little bit ahead of the game instead of reacting to a big price move, and now you suddenly want to enter the stock. Your risk increases on that basis. How about KS? Is that Capstone? I don't know. To me, it's kind of a boring name, but maybe there's some exciting story here. But it's not really going anywhere. Breakout, not going anywhere. You have anything on this one, Dr. K?
Yeah, I mean, it looks, it's not doing anything wrong. If you bought it, you sit on the position.
Yeah.
It's not the fastest name out there. In a good market like the one we're in, I'd rather have my money concentrated in stocks that have relative strengths above 95. This one has a relative strength of 88.
Yeah.
So it's not that exciting to me either.
PKG, another one. I mean, it's forming a base, but it doesn't get as exciting. Someone asked, is Twitter displaying the kind of weakness you would be buying into? Well, a little pullback into the 10-day looks normal to me. So 10-day here is 40.50. I think you got close to that. You got down to, right off the opening, you got to a low of 40.82. You know, for me, that's close enough. You know, hand grenades, horseshoes in the stock market, it's all close enough for that. And that looks fine to me. So yeah, you could test it. If you want to buy it here, you buy it using the 10-day moving average as your selling guide. So it's a lot riskier, less risky here. I'm saying on the pullback. Doesn't mean it's going to come out of here. So it may just sit here and go nowhere, you know, until earnings, which are when are Twitter earnings, Dr. K? End of this month. So you know, in about 4 weeks, I guess. Does DK post anywhere in real time? No, Dr. K, you don't post anywhere in real time. You don't tweet or anything, do you?
No, the really email. I live and die by the emails because that's.
Yeah. So you have any questions for Dr. K? Just send him an email. He doesn't tweet
actually,
like I do.
if you send it to, and don't send it to me directly though. Send it to support or info at Mocha Investors because we all see it. The other issue is that.
Right.
Since everyone's slotted into that, I'm gonna put those on priority.
Right.
Whereas messages right straight to me generally are going to maybe might be of a personal nature. I'm not going to give as much of a priority to those types of emails until you know, later in the day. So you're better off sending it straight to info.
Okie dokie. Let's see. Someone's asking, QCore had a pocket pivot buy, question mark. Here's the pocket pivot, I guess, here, but you're close below the 10-day. Here's where it's probably a valid one. I mean, that's a buy signal, so you would probably use, you know, either probably the 10-day as your selling guide. But I can't tell you if it's going to go higher from here, so looks okay, though. Go in Trexon. I think it's a $100 stock. Should that one in GWPH. Those are my biotech babies. Let's see. You have to understand my thoughts are cheap, so you know I just spread them out all over the place. Dr. K's thoughts are extremely finite and extremely valuable, so he just doesn't want to give them away for nothing. So maybe we should have another website, real-time wisdom from Dr. K for $1,000 a month.
Open source all the way.
So you know.
So yeah. Just a matter of time. Time is my most valuable commodity, so that's always comes down to that.
Right. And if I like to tweet, then that's what I like to do. So, anyways, what else is happening here? Let's see. SWKS. I don't know. This is kind of hanging along the 10-day. That's about it. If you see a pocket pivot, I guess you could buy it there. But we're going into earnings. Shipley Pharmaceuticals, or Shire, I'm sorry. That's SHPGY, I think it's Shipley, I don't know. Well, that's had a viable gap up, and it's way up there. So not really much you can do there. The airlines were kind of feeble the other day. I noticed, like, for example, DAL had a pocket pivot, just barely, and then it failed. And then what was the other one? Love, my favorite symbol. That had a pocket pivot, it's holding. So it's like, I'm not sure what to think here. But, the DAL or American Airlines, I don't know. These things are, to me, they're airlines, so they don't really have big moves. I'm looking for that thing that's going to really have the jack for me. So, let's see. Market's up 81. The Dow almost kissed the 17,000 level the other day, and then it backed up. Now today, I'd say with your 57 points past 17,000, now it's giving it a little tongue on the kiss there. Pardon the imagery. Let's see. Any other questions? We're getting towards the end of the hour. It's 8:55 my time. Netflix, breakout caused by Goldman Sachs, big volume, and it's hanging. It's hanging in there fine. I can't really fault it. Let's see. Amazon might be trying to come around. You know, it's got this. It's 1, 2. I always thought maybe you'd have a third wave down, but so far it's not having. It's turning, so it's kind of a big, ugly double bottom. Maybe it's trying to turn. Kind of iffy. And NetSuite. Try another one. I mean, you see a lot of this. Everything's coming around, and that's normal when you're moving. When you come off a correction and the market starts turning, the market's making new highs. Everything that got hit will start coming up the right sides, and of course we know a lot of that stuff can be viable based on the use of bottom fishing pocket pivots and roundabout pocket pivots, and that gives you an early start. I think also it's probably necessary to be taking 20 to 25% profits right now, as IBD advises you to do. I think, and as I think is prudent as well. You had to be buying stocks on the roundabout pocket pivots in the bases, because I think those are really the only names where you're going to have 20 to 25% profits at this stage. If you've been buying breakouts over the last week or so, you're probably up a little bit maybe, so you don't really have any profits. How does one determine the low? You try to do so early in the session or wait until later in the day? I mean, you can try to do either ones, you know. So, or either one. The PANW had established its BGU low. I actually waited to buy that on the second or third day on the pullback. You know, GBX, I bought yesterday at around 64 and change towards the end of the day, because it looked to me like it was just folding up and it looked good. So you can't really gauge it. All you can do is look and see if it forms a low. Then during the day, then you can try and see if it doesn't retest that or break down through it. If it does, you can always back away and try to come in or give it a little room. But there's no way to know for sure where the intraday low is on the first day. You're basically just trying to come in where it looks like it might make a low and then be ready to skedaddle if it doesn't. So, Dr. K, do you have any insights on that particular process? Or did I cover it?
Well, yeah, I mean, with these, we answer some of this in the FAQs. If you type in, basic ways to handle Bible gap ups. It really is contextual. I mean, if we're in a strong market and the stock is a really strong story behind it and it gaps up, I might just buy it at the open, and take my chances.
Right.
So, I found that tends to work best for me. But then I'm really focused on the best of the best. If we have, say, also the technical action, say, on a stock is a little bit on the sloppier side, then on the gap up, I might expect some retracement of sorts. So I may buy half position at the open and then figure out where to buy the rest later in the trading day.
Somebody said, I assume that PANW had established its BGU low. It did on this day, yes. And on this day, you were shaken out. But the thing you have to keep in mind here is if you give it 2 to 3% on the downside, so 72 is the low here, and the 72.86 is the low here. So you're 1% below this low. So with a volatile stock like Palo Alto Networks, to me, that you should give it a little more room. If I'm buying it in here, I'm probably giving it down to the top of the gap here, which is 70.56, because it's all pretty tight. You're within 2 or 3%. So you don't have to use the low as a hard stop, and I would not recommend doing so anyways. I think you give it 2 to 3% on the downside.
One of the rules we cite in our literature and on the FAQs is that we typically will give a stock 2 to 3% downside, simply because the ones we're adding that are viable gap ups tend to have high relative strengths to begin with, a lot of price momentum, and so there's going to be more volatility associated with that kind of pattern. And I mean, PANW, you can see here that it's quite sloppy since March. The banding is pretty wide, so when it does a gap up, and it the pattern's sloppy, but it redeemed itself because it's kind of a double bottom pattern, and then it came back up and it gaps up. But you expect some retracement just because of the prior pattern.
Yeah. So it's not. There's nothing exact about it. And the other thing is, if you do get shaken out and then it closes back above that low, why not just buy it back? A lot of people are real anal retentive about that. To me, the beauty of the stock market is that it's extremely liquid. You can buy and sell and buy and sell and buy and sell the same stock 10 times a day if you want. So why not use that to your advantage rather than deciding you're going to take a position and blow yourself out, on a hard stop without being flexible if the stock turns around and goes back up. I remember in October of 2005, Bill O'Neill had a big position in Apple, and the stock came out with earnings. I think it dropped like 5 or 6 points, and he sold it. And the thing turned around and went back up, and he turned right around and bought it back 2-3 points higher. So you have to have that kind of flexibility, and if you don't, then you're too rigid, and you give yourself one shot to come into a stock. I will take sometimes several trades before I'm actually firmly in something and comfortable with it at that point. So, and I probably on this day, I'm coming into the stock and I'm probably buying a little, selling a little, working it, trying to get in and seeing where it settles down. And so I use that to my advantage. Of course, it helps to have a margin account so you can use intraday margin. But, that's the way I'll operate, and that's the way I've always operated. So, and like I was saying, you start doing that in somebody's managed account and they're all freaking out, So that's the way I run money. That's the way I'll always run money, at least from here on out. Anyways, flexibility is key, and being willing to come back in if you get shaken out, rather than adhering to what is a foolish notion that you can somehow operate with certainty in the stock market. You cannot. So forget it. And I get a lot of emails from people trying to impose some sort of certainty or some rule. Like, what do you use as a guideline to take profits? Well, there's a variety of things, and they're contextual, and I'm trying to think about it in real time, and there's no real hard rules, and I don't know if I'm going to do it exactly right, but I get close enough to make plenty of money, so it seems to work. But I accept the fact that uncertainty is part of the game and will always be part of the game. So success in the stock market is not about, as we wrote in our second book, it's not about having certainty. It's about learning to deal with the uncertainty that's inherent in the stock market. And that's really how you become successful, is in determining not what's going to happen for sure, but how you deal with the uncertainty and what your strategies are in terms of that basic idea. Anyways, somebody asked a question. We're going to close up right here. A couple more questions here. Gil, you talk about using the 10-day moving average as a selling point, but also as a potential point to add to a position. How do I tell which action to take? I mean, a little common sense doesn't hurt. That's how you decide. But if something is pulling into the 10-day moving average and the volume's light, then that's a point where you could buy. And then you might use that point. If it can't hold the 10-day moving average, then I might just unload it. So, that's basically what you're doing. Your 10-day moving average becomes a point to buy, but as it pulls into that line, you're expecting it roughly. You can see here, it roughly holds in there. You could use a 20-day as well if you wanted to. Let's say if you bought at the 10-day, use a 20-day as a stop. I'll do that sometimes, given that it already demonstrated that it can pull down into the line here. But I got to think this is going to try and hold. If it doesn't, then I'll just back away and find happier hunting grounds, of which there are plenty in this market. So, you're using them both the same way at the same time. There's no taking. How do I tell which action to take? It's a guide. It's not a stop sign or a signal that has a green light and a red light on it. So you have to learn to use it as that. I really appreciate all that you do here and in the chat room. You've helped me become a much better trader and manager of risk. Have a great 4th, and thanks for being tough on us. You're welcome. Well, thanks for answering and discussing with Dr. K in much more detail than I expected. BGU low setup makes much more sense now. Certainty regarding the market appears nowhere within my vocabulary. Yeah, I mean, that should be your guiding principle. Is that, you're not going to be successful in the markets if you're searching for certainty. You will be successful if you're searching for ways to handle the uncertainty in a manner that allows you to improve your odds of success. And that's basically what investing is all about, putting yourself on the right side of the odds, really. Anyways, it's 9:05. We got 5 minutes over. We got 55 minutes left in the trading day, and that's all I've got. So, it's kind of slow here, but I think you're seeing a little shift. We'll just see how things pan out. Remember, again, this concept of the market getting what are we now, like 7% beyond the 50-day, Dr. K?
Yeah, because there's that 5 to 6% rule. Right now at 44.78. Let's see, 44.78, and the 50-day is at 42.34. So we're 5.7% above the 50-day.
So, I mean, we've seen the market, the indexes slow down, and then the 50-day can catch up. But I think the bottom line is just watch your stocks and move with your stocks, and that's really it. So, anyways, that's all we got. Thanks for showing up, you guys, as always. Have a great long weekend. It's actually going to be real long because we get out of here in, 54 minutes now. So we'll catch you guys next time. Good luck today and next week, and we'll talk to you later.
Take care, everyone.